And now we come to trade of the day, the highlights of this week's trades. Let's get into it. Good evening and welcome to Follow the Money, bringing you the latest updates on everything finance, business, the markets, and investment funds. Our top story this week: in a significant financial move, US bank State Street has been appointed the new custodian bank for a substantial compensation fund managed by the Swiss federal government. This multi-billion dollar fund, previously under the care of UBS, marks a notable shift in financial custodianship. According to authorities, the decision to transition the AHV fund to State Street was finalized in December after an extensive 2-year tender process. Compenswitz, the federal body responsible for managing the public pension fund, announced that the transfer is expected to be completed by the end of this year. Valued at over 40 billion Swiss francs, or approximately $44.48 billion, the fund had been under UBS for an impressive 26 years. Compensers emphasized in a statement that the role of custodian bank is purely administrative and does not involve managing the compensation funds directly. This statement also clarified that custodian banks typically appoint sub-custodians in various countries. In this case, UBS will continue to serve as the sub-custodian for the fund's Swiss assets. Despite this transition, the fund's Swiss assets will remain with UBS, ensuring continuity in local financial management. UBS has declined to comment on this report. This development signifies a noteworthy change in the financial landscape for the Swiss federal government's compensation fund, showcasing the evolving dynamics within the banking sector. Also on Follow the Money, BlackRock has announced its agreement to purchase the UK data firm Preqin for £2.55 billion, equivalent to $3.23 billion in cash. BlackRock, which oversees more than 10 trillion in assets, is aiming to capitalize on the increasing demand for alternative assets, which range from private equity to infrastructure. Sources close to the bidding process disclosed that BlackRock outbid other potential buyers, including London Stock Exchange Group and S&P Global. The full sale of Preqin was confirmed following this competitive bidding process. The surge in demand for financial data and research has sparked a wave of acquisition in recent years. Notably, S&P Global completed a $44 billion all-stock purchase of IHS Market in 2022. BlackRock stated that the acquisition of Preqin would enhance its Aladdin tech business by integrating data, research, and investment processes for fund managers. Aladdin is BlackRock's renowned portfolio management software that provides investment professionals with tools to manage daily investments. Despite the acquisition, Preqin will continue to be offered as a standalone solution, BlackRock confirmed. Preqin is projected to generate approximately 240 million in recurring revenue in 2024, having grown around 20% annually over the past 3 years. Founded in 2003, Preqin specializes in data on the alternative investment industry and has several subscribers in over 90 countries. Mark O'Hare, founder of Preqin, is set to join BlackRock as a vice chair once the transaction is completed. That's all for Follow the Money this week. Thank you for joining us. Join us again next week in the latest updates in the world of money. Back over to the studio for Trade of the Day. Welcome to Trade of the Day, our groundbreaking weekly series where we reveal the secrets to achieving consistent profits in a fast-paced world of day trading. Join us on this exhilarating journey as we decode the strategies and mindset needed to harness the power of the market and unlock remarkable financial growth. Whether you're a new trader seeking to build your wealth or a seasoned investor aiming to amplify your gains, our series is your roadmap to success. Get ready to revolutionize your trading approach and embark on a path to achieving your financial dreams 1 week at a time. Also, we love to know where in the world you're tuning in from, so post in the comments below. A reminder that this is not financial advice and that trading comes with real risk. My name is Alice, and I help traders and investors who struggle with confidence to make money in the financial markets, find consistency, and scale to achieve financial freedom, time freedom, and location freedom. I believe trading is the greatest wealth building tool of all time, and everyone on this planet needs access to this skill. I'm on a mission to impact 1 million people through trading by 2030. Let's go. Coming up this week, this is how you could have made 5% in the market, taking one trade a week, using one model, risking no more than 2% of your equity, looking to make a 1 to 3 risk to reward. So you're risking 2% to make 6%. We had a total of 4 trades this week for a potential return of 16%. It's important to know that everything we share here is how we trade at I'm the Trader. But before we dive deep into this week's trade of the day, let's talk about having a trading edge and what that entails. A trading edge is one of the 3 pillars every trader must have in their trading to survive and thrive in the financial markets. If you don't have these 3 pillars in your trading, you're setting yourself up to fail. Confidence in your trading edge comes from 3 things. 1. Understanding the market and how it operates. 2. Having one trading model that has IPTA signatures. 3. Having a plan and process that you follow every single day. Successful trading is boring. You're doing the same thing over and over again. This is the 3-step process I use to take trades weekly. Step 1, condition. This is based on a high time frame directional bias. Step 2, stage. What sets up your trade? What does it look like? Step 3, execution. Can you execute? Have your entry criteria been met to get in that trade? The most important step is step 2, the stage, because once you understand where the market is going and you understand the setup, the entry is easy. Also, guys, if you understand price flows that occur around key highs and lows intraday, you'll have everything you need for a setup. And you don't need to thank me for that one, okay? Step 1, condition. Determine the high time frame directional bias. Where is the weekly candle likely to go? What is it reaching for? This will give you your condition going into the week. Several factors go into determine the high time frame directional bias. However, there are only 2 options. Is either you're expecting the weekly candle to expand higher or you're expecting the weekly candle to expand lower. Step 2, stage. What sets up your trade? What does it look like? First, we look at the economic calendar for the week. It lets us know when to look for a setup. We look for medium to high impact news drive to narrow our focus. We stock setup on calendar day and after the news release. The optimal days to trade this week were Monday, Tuesday, Wednesday, and Friday. Bearing in mind this week was NFP week, and NFP protocols means that on this particular account, we'll be done trading by Wednesday AM session, okay? Secondly, we look at what sets up your trade. What does it look like? This will be your model. If your weekly analysis suggests that price is going higher, then you're in a buy program and should be hunting long formations. For our buy model, we want to see price trade below a key low, displacement higher causing a market structure shift. The displacement leg must have a fair value gap busy near the swing low. We wait for a swing high to form to anticipate execution. If your weekly analysis suggests that price is going lower, then you're in a sell program and should be hunting short formations. For our sell model, we want to see price trade above a key high, displacement lower causing a market structure shift. The displacement leg lower must have a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. Once the stage is set, when and how do you execute? For execution, we're looking to enter on a fair value gap or order block created in a displacement leg that took structure. You have 2 options here. You can either enter a limit order at the fair value gap or a limit order at the order block. We use the fair value gap near the equilibrium of the range. You can also use the low hanging fruit option, meaning the one closest to price. Stop loss will go at the swing high for a sell and at the swing low for a buy. You're always going to be targeting a 1 to 3. It's important to know that you can have both model form in a span of a day or a week, but your high probability trades will be in the direction of your weekly program. Here are some factors to consider for high probability setup. First, we have time, the most important aspect of trading. At what time is the setup occurring? Then we have range. Where are we within the range? Are we in the upper, middle, or lower quadrant? Then we have liquidity. Is there or does price create liquidity right in front of the fair value gap or order block? With regards to this liquidity, once price takes the liquidity and enters the fair value gap or order block, you should see an immediate reaction. Lastly, where is your cutoff point? Where can you no longer enter the trade? For me, once price leaves the 0.25 fib extension, I'm no longer interested in entering the trade. Trading is a solo sport. You have to make it unique to you and your personality. What may work for me may not work for you. All of this sounds complicated, I'm sure, if you're hearing it for the first time, but it's really simple. You just need to show up on the charts and look for it. Now let's head over to price action and look for it this week. Welcome to Tracking IPTA. We had a short action-packed NFP week, and I have to say it was another incredible week of watching IPTA and learning more about myself and the model. I learned that when my model fails, it's telling me something about IPTA and where she wants to go to next. I actually discovered the re-entry setup that occurs after my setup fails. I went back through my journal looking at all my failed setups, meaning the ones that lost, and I saw similar characteristics on how I could have re-entered after the trade failed. Guys, if you're not journaling as a trader, you're setting yourself up to fail, man. I've been journaling for it's been over 2 years now since I started journaling, and it's immensely improved my trading. I'm able to go back into the trades I've taken and see why they lost, and been able to see similar characteristics in price action as to why certain setup fail and what happens after it fails. It's just journal, guys. Believe me, I didn't believe it at first. Trust me, when I first got into trading, I was like, ugh, I don't need to journal. I didn't journal for the first 3 years of when I was learning how to trade. I didn't journal. When I started journaling after a year, difference. Okay, guys, nothing beats experience, and if you're losing in trading right now, it's only because of time and experience. These are things that you have control over, so please don't give up hope, okay? I finished the week with a 7.2% increase in equity. Dollar signs were talking, as you can see on the screen, $1,805, and overall we're up on the account by 33.5%, which is $8,375. Let's get to hunting, guys. Grab your tools. As always, we'll be looking at the charts in bar replay mode. This means you won't be able to see my executions. However, you will be able to see my horizontal line, which represent the time aspect of trading. The most important tool you need to track down IPTA's movement, time. Now remember, even though I'm going to show you both buy and sell setups, it's important to know that your high probability trades will be in the direction of your weekly program. You can take counter trend trades with this model. For example, you can take sell setups even if your high time frame direction is bullish, and vice versa. It's just your probability of winning reduces significantly when you go against the high time frame directional bias. If you're new to trading, I do suggest only taking trades in your weekly bias, okay? Just to avoid taking counter trend trades and losing and thinking that the model isn't working and then you're switching strategies, okay? It's not the model, it's you. We're going into this hunt with the understanding that you guys have already arrived at your high time frame directional bias. This is a hunt purely for setups. To the hunt. Let's go. Monday, July 1st, trade of the day breakdown. We had the AM session buy formation. Let's break it down. As always, we start with the economic calendar, and as you can see, we had high and medium impact news come out at 9:45 and 10. Opening range 9:30 to 10 o'clock. We're not trading. We're looking to see what price is doing. As you can see, post 10:10 is when we're looking for the signal to enter the market. Post 10 o'clock, we had price trade below a kilo. Displacement higher, causing a market structure shift. The displacement leg has a fair value gap BISI near the swing low. We have multiple BISIs, okay? We wait for a swing high to form to anticipate execution. And for execution, we're looking to enter on a fair value gap created in a displacement leg that took structure near the equilibrium of the range. We had the high from the highest point in this region right here is here. We had the high form right here. The first discount array below 50% was the high of this BISI right here. So you would have been tagged in this trade at 10:54, breaking even at 12:39, getting out that trade at 2:15 for a total time of 3 hours 21 minutes in this trade. Drawdown on this trade was 18 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had the time aspect, this AM session. The range, we're in the middle to lower quadrant, we're in discount for a buy. Liquidity, we have a short-term low right here created before the high of the BISI. When price took that liquidity, as you can see, we saw immediate reaction to the upside, letting you know that you were on side, okay? So 3 out of 3, making this a high probability trade that netted you 6%. This was, in fact, the trade that got me my 7.2% for the week, and I was done trading on this particular account. As you can see, July 1st, I was done trading on this account after this trade, okay? The following setups that come, you could have took them as well, don't worry, but on a separate account, okay? This is just one trade, one model account, okay? We're not expecting the model to do anything more than it does, okay? Monday, July 1st, we also had a lunch session, sell formation, a counter trend trade. Let's break it down. As always, we start with the news. We already had the news come out in the morning. Lunch session start. We had price trade above London session high. We take liquidity above that London session high, which is a key high. Displacement lower, causing a market structure shift. The displacement leg has a fair value gap CB near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg near the equilibrium of the range. The first premium array that's above the 50%, we have the high of the SIBI right here. So you would have been tagged in this trade at 101, breaking even at 105, taking out the trade at 123 for a total time of 22 minutes in this trade. Drawdown in this trade was 20 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had the time aspect is a lunch session. Range, we're in the middle to upper quadrant, we're in the premium for a sell. Liquidity, we do have a short-term high right here created in front of the, not the high, but in front of the consequent encouragement of the SIBI. So it does come and take that liquidity. And once it takes the liquidity, as you can see, immediate reaction, letting you know you're on side, okay? So 3 out of 3, making this a high probability setup that netted you 6%. Tuesday, July 2nd, trade of the day breakdown. We had the AM session self-formation, a counter trend trade that failed. Let's break it down. As always, we start with the economic news, and as you can see, we had high impact news come out at 9:30 and 10 o'clock. Post 10 o'clock is when we're looking for a signal to enter the market. As you can see, we had price trade above a key high. We had liquidity taken above a key high. Displacement lower, causing a market structure shift. The displacement leg has a fair value gap SIBI near the swing high. We wait for a swing low to form to anticipate execution. For execution, we're looking to enter on a fair value gap created in the displacement leg that took structure near the equilibrium of the range. And the first premium array that we have above 50% is the high of the SIBI. So you would have been tagged in this trade on this candle at 10:14. You don't get to break even. You're taking out the trade at 10:35 for a total time of 21 minutes in this trade. Drawdown in this trade was 123 tick for a 2% loss. Okay, it was a counter trend trade that failed. Even though we took a loss, let's look at factors that made this trade a high probability setup. First, we had the time aspect is the AM session and is post 10:10. Checked the range. We're in the middle to upper quadrant. We're in the premium for a sell. Check. No liquidity in this setup, but we do have 2 out of the 3 matching to make this a high probability setup. And even though you took a loss, like I said, that's the only thing promised to traders. This was, in fact, the trade that actually got me to realize where I can get in once the setup fails. Okay, so I learned a lot from my losses, which is what you're supposed to do as a trader. I went back and looked at all the TOTDs that failed, and I realized similar characteristics in the majority. It wasn't all of them, but the majority of them enough to tell me that, hey, once the setup fails, look for this, look for that, and you can get back in on the trend. Wednesday, July 3rd, trade of the day breakdown, and we had a half day. Market was closed after the lunch session, so we did have a morning session buy formation that formed. Let's break it down. As always, we start with the economic calendar, and as you can see, we had medium and high impact news come out in the morning. 9:30 to 10 o'clock opening range. We're not really trading. We're looking to see what price is doing. And before 9:30, actually, we had the setup form. We trade below a kilo. Displacement higher, causing a market structure shift. When the model forms prior to the opening range or during the opening range, post 10 o'clock, we're waiting to see if we get priced to drop back down into the fair value gap that was created in the displacement leg below 0.25. And as you can see, post 10 o'clock, we had price drop down. The discount array below 0.25 was right here. We had it looks small. We had a BISI right here. It looks small, but it's there. I can zoom in a little bit so you guys can see that. Yes, we have a BISI right here. And as you can see, post 10 o'clock, price comes into it. So you would have been tagged in this trade at 10:26, breaking even at 11:16, taking out that trade at 11:51 for a total time of 1 hour, 25 minutes in this trade. Drawdown in this trade was 6 ticks for a 6% bagged and tagged. Let's look at factors that made this trade a high probability setup. First, we had a time aspect is the AM session check. The range, we're in the middle to lower quadrant, we're in a discount for a buy check. Liquidity, we have a short-term low formed right here. We also had this short-term low, right? Oh, no, actually that one actually comes into here. So we had this short-term low that price comes and takes into the BISI, and as soon as you take that liquidity, you saw immediate reaction to the upside. Okay, letting you know once again that you're on side. So 3 out of 3, making this a high probability to set up on this NFP week, netting you 6%. Okay, this week was very short and action packed. I only traded on Monday and I was done. One thing I'm still struggling with, by the way, is my exits. I'm still finding it difficult when price reaches the close to my TP. Just keeping my hands to myself and letting the price hit the TP. Once it gets close and it starts retracing on me a little bit, I get antsy and then I end up closing the trade, which is what I did on Monday. I ended up closing the trade prematurely. If you guys have any tips on what I can do with my exits, I guess I could just walk away from the charts once I'm in a trade and just either let it take me out once set an alarm for break even. Once I hit break even, walk away from the charts, go do something else, and I guess it can either take me out or I'll hit TP, right? But I'm gonna try that this week coming to see how it goes. I'll keep you guys posted. But yeah, thank you guys for watching Tracking IFTA. I'll see you all next week. Hopefully you guys learned something and you enjoyed this. If you have any questions, post in the comments below. If there's something about the model that you don't get, you know, I'm here to help you guys. I'm on a mission to impact 1 million people through trading by 2030. I mean that. That's my purpose right now. And if you guys have any questions, post in the comments below and or reach out and I'm more than happy to help you guys out. Okay, there's more than enough money for all of us to eat and come back for seconds, thirds, take some home for for the folks at home and just pack it to go play. Okay, I'm not selfish. You making money in the markets doesn't take away from the fact that I'm making money in the markets. Okay, we can all make money. I want to build a community of billion-dollar traders, so let's make it happen, guys. All right. Thank you guys for tuning in. Every week, we have shown you at least one or more opportunities that could have netted you 5%. With a 2% risk, if you had taken all 4 trades this week, you'd be looking at 16% for the week. But remember, we're only looking for one trade that will net us our 5% and we're done trading. Us traders, we must be content with enough and we must learn to limit trade frequency. The less you're in the market, the less of your money it would take. I hope you guys found Trade of the Day insightful and hopefully you enjoyed this one. Deciding to become a trader is the greatest decision one will ever make. It is the fastest way to build the life that you want. And too many of us fail at it. 90% actually. This is because we're not equipped with the right tools to ensure survival, let alone thrive. There is a way to succeed at trading. Trade of the Day is about showing you how we at I'm the Trader are doing it and how you can do it too. Always remember, this skill is not easy to master, but it's also not impossible. You only fail when you quit. Thank you for watching. See you all next Saturday, same time, same place. Happy hunting.